This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history.
There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Hello, everybody, and welcome. It is good to see you again. I'm just going to wait here for just a little bit for some folks to come on here as we start to go live. An enormous amount to talk about today. There have been a couple of little stories and one big story that a lot of people have been, I don't know if they've been ignoring or not really fully understanding the power of the story. And I'll get into it in just one moment. Okay, so there was one really huge thing that took place in the Bitcoin world that kind of got ignored. And I'm going to talk about that in a minute, but let's talk about the action right now. I've been warning that we would have a post-halving dip in Bitcoin and not to worry about it. And I wrote a couple of articles about how to take advantage of it and the different levels that we could see Bitcoin drop to. I put these levels together, 62, 52, perhaps even as low as 42 to 45K. So we've been as low as 56 and change, rallied up to 65, got smacked back down to 62, up today on a relatively, I can't call it a benign inflation number, but the market is viewing it that way, and we're trading up at 65K. This level is critically important. If BTC cannot close, of course, there is no closing, it's a 24-hour market, but on the 24-hour chart, if it can't close above this level and stay up this level, chances are it could roll over and just keep bouncing between this 60,000 and 65K level. If that level doesn't hold, you could see a brief drop to 52 and 45 could still be in the cards. Now, speaking selfishly, I have orders all the way under the market. I bought more at 62. I have orders at 52. I have orders sub 52 going all the way down to 42 and 32K. Now, will we go down there? It is highly unlikely. But if we do, I want to make sure that I am not getting victimized by the volatility, but I will emerge as a victor from the volatility. I will make the volatility work for me. If you just go back and look at how Bitcoin behaves post-halving, Bitcoin is acting in really a textbook fashion. You get the rally up into the halving, you get the post-halving hangover, where it sells off and you get a lot of chopping, you get people getting worried. I mean, I've received a lot of emails from folks, hey T, is it different this time? Hey T, should we need to be worried? Hey T, I know that you warned me that this would happen, but it's still a little worrying. So that's normal. A big reason why I'm doing these weekly videos is just to give you some perspective. The volatility within Bitcoin is normal. And your job as an investor is to take advantage of that volatility and not to be victimized by it. Because if the volatility didn't exist, the ability to make the kind of money that you can make in these assets would not exist. So volatility is a friend if you know how to use it to your advantage. And the way we do that is through rational position sizing, knowing whether we're in a bull market or a bear market. And if we're in a bull market, we buy on weakness. And I've written a couple of articles about this, about how to buy on weakness, where you are essentially scaling in with gradually bigger positions, which is different from the way most people do it. On the first pullback, they put their whole wad in, and then, if you get a bigger pullback, they've got no more capital to put to work. Now, the one thing that I have learned from 30 years of being involved in financial markets is that when I buy on a pullback, I'm usually early. 9 times out of 10, I'm early. Maybe the 1 in 10 or 1 in 20, I'll absolutely nail it. So what I have learned to do is that on the first pullback, I put a little bit of money at work. If it goes back a little further, I gradually increase my position size into pullback. And then by doing that, I have the most amount of money at work when the price is looking its ugliest, which is the exact opposite of how I used to do it when I was younger and, just not as good as an investor. So just learning that one little trick, that one little change in terms of your mindset can really have a dramatic impact on the quality of your results over the entire period of the bull market. It's really important to understand where you are in the current cycle. Are you in early bull market, mid bull market, late bull market? Because the strategies that you employ are going to change dramatically. I am not a heavy buyer on pullbacks late into bull markets, because you don't know if you're in the beginning of a trend change or not. But when you're early in a bull market, you can pretty much buy the pullback. And even if your timing is horrible, because you're so early in the pullback, the bull market will bail you out. And so what I endeavor to do is put as many of the odds in my favor as possible. And buying Bitcoin on its first major pullback after making its first new high after a 2.5-year bear market, it's about as a gimme a trade as you're ever going to get in crypto. Now, I've been referencing a lot of articles that I've been writing. For those of you that have not are not getting my free newsletter, please go to tawariresearchgroup.com. That's tawariresearchgroup.com. And I publish generally 2 to 3 times a week there. And that is a completely free newsletter. That's where my latest ideas are being published. I just published on Monday a story recommending to buy Ethereum. And I want to talk a little bit about why I'm bullish on Ethereum. And I haven't talked about Ethereum much. Right now, the zeitgeist, thank you, tawariresearchgroup.com. Thanks, Michael. The zeitgeist right now is extremely negative about Ethereum. In fact, I've had some folks contacting me and say, hey, T, is Ethereum going to go to zero? So when I see that level of fear around an asset, and then we have the Ethereum ETF, which is probably going to get denied, and that's May 23rd, and everybody believes that there's no shot that an Ethereum ETF is going to be approved. When you have all this negativity into it could be a stock or it could be a crypto, then you have to look at that and you say, okay, the bad news is priced in. So it doesn't take much good news for the underlying asset to move up in price, which is why I recommended that the link is not in the bio isn't working. Okay, thanks for letting me know. I'll let my social team know that. To get on that link in bio. I appreciate that. So when there's so much negativity, the bad news is priced in. So let's say we go into May 23rd and the SEC, doesn't approve the ETF, which is the Ethereum ETF, which no one is expecting it to be approved. Then you might see the coin go up in price because all the bad news has been priced in. Now, if by some weird twist of the fates, the SEC approves an Ethereum ETF, no one is positioned for that. No one is expecting it. You could see Ethereum double virtually overnight. So one of the reasons why I like this as a trade is that whether the ETF gets approved or not, if Bitcoin goes up, which it will, Bitcoin, I believe, will go to at least $150,000. With Bitcoin at least doubling, there's no way that Ethereum doesn't go higher as well. And so when you have a situation where the common zeitgeist or the investor sentiment around Ethereum is so negative, you got to say to yourself, well, all the negativity is priced in. So if all the negativity is priced in, right, and the negativity is, oh, it's expensive, Solana is going to destroy it and displace it, the SEC is going to call it a security. All of that is priced in right now, and it's still at $2,900, right? Still worth hundreds of billions of dollars. So I think even if an ETF never happens, and even if Solana continues to gain on Ethereum, price of Ethereum will be higher a year from now, just simply because of the gravitational pull that Bitcoin exerts over the entire crypto ecosystem. Now, just to share my opinion, I do believe an ETF will be approved for Ethereum. I think there's just too much money and too many moneyed interests that are lining up behind Ethereum to get it approved. They've seen how many assets have been raised by the Bitcoin ETF, and then they're salivating at the fees that they can make on an Ethereum ETF. So I think what will happen is either Grayscale or some other ETF provider will go to court, and just the same way that Grayscale got the courts to compel the SEC to reverse their decision on a Bitcoin ETF, they will more than likely do the same on an Ethereum ETF. So regardless, I think there's money to be made in ETH. Any questions on that before I move along? Okay, the other story that I want to talk about is, in my opinion, the biggest story that no one is really making a big deal about, and they should. Now, for years, question is, how high can ETH go? I think ETH can go to $1 trillion market cap this cycle, which is around 10K. That's what I think, especially with an ETF. For years, I have been writing that institutions will come into crypto. That's happened. I've also been writing that pension funds will come into crypto. First, they will come in slowly, and then they will stampede into this asset class. And so, for many years, I've really been ridiculed for having that belief and talking about that. And over the last few years, we have started to see smaller institutions, family offices, start coming into crypto, but no real massive elephant of a pension fund. All of that changed last week when we found out that the Wisconsin pension fund, which is a $150 billion pension fund. This isn't like some small family office with a couple $100 million. This is a $150 billion pension fund. Came out and said, yeah, we own $100 million worth of the Bitcoin ETF. This is the Netscape moment for pension fund adoption of Bitcoin. Because think about it. This Wisconsin fund, it's not some small town, that decided to buy, a couple of Bitcoin or put a couple of $1 million in Bitcoin. They put $100 million into Bitcoin. They're $150 billion large. I want you to think about the cloud cover that gives every other pension fund manager in the United States. So every pension fund manager that is sitting there thinking, gosh, I really would love to add Bitcoin to the portfolio, but nobody else has done it. I don't want to be the first guy to do it. I don't want to get fired. Now that guy can go to his investment committee and be like, look, these guys put $100 million in, right? I think it was it's just a few basis points, but it's $100 million. We got to own some Bitcoin. And so bit by bit, what will happen is these conversations are now going to start taking place in front of the committees that make the decisions about the assets that go into these funds. Now, it's a slow process, okay? It's not like you and I making a decision. This is a slow process, but this is it's a flywheel effect. So then we'll have another pension fund, then another pension fund, and then another pension fund, and then they'll start with, okay, we'll put 25 basis points of our fund in, 50 basis points, 75 basis points, 100 basis points, 200 basis points, and it just like a snowball, it starts to compound. And we get to own this asset before they do. They have to go through a long and arduous internal compliance process in order to buy Bitcoin. We don't. So just take advantage of the weakness. I personally am hoping that 65K fails, we roll over. I would love to see 52. I would love to see 45, even 42K, which I don't think we're going to see. And I know that I'm going to get a lot of hate for that. I know people are going to say, no, T, we don't want that. We do want that. That's how you get really rich, right? You buy great assets when they're cheap and you hold them. Now, as I've said, I believe over the next 18 months, Bitcoin goes to at least $150,000. And on that journey, it's going to rally the whole altcoin market to a level that we have never, ever seen before. I'm incredibly excited about what the future holds. I know that over the short term, anything can happen. We could have had a bad CPI print this morning, and then Bitcoin could have sold off. Maybe next week, Powell says something the market doesn't like and Bitcoin sells off. I want you to get very clear as to what moves this asset over the longer term. On any given day, any individual in power or influence can say something that can move Bitcoin or the stock market or anything. And when those days happen, especially on the down days, if we do see 55, 52 or something or even in the 40s, which could happen, if that happens, I want you to remember this fundamental truth around why we are long Bitcoin. So this is an adoption story. This is a new form of technology getting adopted. Think about Microsoft. Microsoft was incredibly volatile in the 80s and 90s, but all you had to know was that Microsoft was an adoption story. And what was the adoption story? The adoption story was that everybody was going to own a personal computer, and that personal computer was going to have Microsoft software on it. That was all the research you had to do. It was the only thing you had to know to make a fortune from that stock. And I'm telling you right now, the only thing you need to know about Bitcoin is that it's an adoption story, that we are very early in the adoption cycle of this asset. Now, why are people going to adopt this asset? Because we are in what I believe will be, when we look back on this decade, people will look at it and call it the decade of debasement. The same way that they look at the 70s. The US dollar's buying power is getting debased at a rate that we have not seen since the 1970s. And so you must have a way to protect your assets. Right? And back in the 70s, the asset that people used, the savvy people, the people that really got just stupid rich in the 1970s, they used gold. And they watched gold go from $35 to $800 over that 10-year period. It was a massive move. Now, through this decade, the smartest people that are going to make the most amount of money with the least amount of risk are the people that buy Bitcoin. Because by the end of the decade, I expect Bitcoin to be at least $700,000. Whatever gold is, I expect Bitcoin to match it and eventually surpass the value of it. Over the course of this market cycle, I think we see at least 150K, possibly much, much more. But I'm confident saying 150K. So my point is, when everything looks like it's blowing up, everything looks like it's exploding, nothing feels like it's making sense, I want you to get back to the bedrock reason behind why Bitcoin will outperform just about any other asset that you can buy. Because the adoption of this asset, it's going to go from an asset that's only adopted by a few folks to an asset that's adopted by virtually everyone. At some point, either MicroStrategy will get into the S&P 500, or some type of business that has a huge ownership in Bitcoin will get into the S&P 500. And that will be kind of, Bitcoin's coming out party, right? Because that essentially will be Bitcoin joining the S&P 500. At some point, every institution will have an allocation to Bitcoin the same way that they might have an allocation to emerging markets or an allocation to commodities. Everyone will have an allocation to Bitcoin. And so that journey is really just beginning. And you have to remember how early we are in that adoption story. And again, go back to Microsoft. You were early on the adoption story from Microsoft from 1986 all the way to 1996. You had 10 years. And then you had this massive value appreciation between 96 and 2000. Then you had this terrible sideways movement. And then again, it was cloud was the bet with Microsoft. But my point is, once you have identified a technology adoption story and the leader, the primary beneficiary of that adoption story, you just buy and you don't let go. That's it. And you'll make a lot of money. Somebody asked a quick question about allocation. It depends for everybody. I used to be 50% BTC, 50% ETH. I kept my ETH, and then all my new buys were Bitcoin. And now I'm probably 80% Bitcoin, 20% ETH, somewhere in there. But I'm more heavily skewed to Bitcoin because Bitcoin has the ETF. And the ETF is a critical roadway into this asset class for these massive elephants of capital. That's what will take Bitcoin from a $1 trillion asset to a $4 trillion asset to a $6 trillion asset to a $10 trillion asset. You can't do it without institutions because they just control too much capital. So I believe that the next ETF approved will be Ethereum. And again, you're going to have just massive institutional fund flows into the asset. All right, friends, I am actually traveling again today. I have to fly to Atlanta. I'm delivering a speech on Bitcoin to a room full of billionaires, doing my best to orange pill them and let them know why they should allocate 1 to 5% of their net worth to Bitcoin. Please wish me luck on that. Okay, so this is a good question about the ETHE trust. Full disclosure, I own it. It looks to me like it's out of danger with the parent company. I own quite a bit of it. If you are willing to deal with the 2.5% fee and the fact that it trades at about a 25% discount to Ethereum, it's a great way to buy Ethereum to get 25% more Ethereum on your money. And if you believe, as I do, that eventually an ETF will be approved, that 25% is essentially free money. I don't really have an opinion on Roaring Kitty. I mean, it's great for GameStop holders. Question is, when will ETH be approved? If not by May 23rd, let me look into my magic 8-ball. I don't know. If the SEC makes them go and do it the hard way and go through the courts, it could take, 8 months or a year. But I would imagine by next year sometime, the courts would have ruled on it and approval will be forthcoming. I am not going to consensus. I don't go to consensus anymore because it's just a circus. And I don't really get anything of value from it. If there are a couple of people speaking that I want to hear, usually they'll live stream it, but I don't go to consensus anymore. Okay, so just a quick reminder, TawariResearchGroup.com. Could somebody post that in the comment section for me, please? That is where you can get access to just my most recent commentary. I'm writing, 2 to 3 times a week. I'm really trying to publish Monday, Wednesday, Friday. Ultimately, that will be a daily newsletter. I've just got to hire more folks, but that's going to take some time. The 2.5% commission is an annual fee. So when you buy Ethy, they basically levy you an annual fee of 2.5%. Thanks, Sheena, for putting that up. Friends, thank you so much for tuning in. Always a pleasure. Please just be rational. If we have volatility, just be like, okay, Big T said be cool. All right, so just be cool. Everything's going to work out. Friends, I want to thank you so much for tuning in. And I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.